Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 23rd of July, 2023. And last week was exciting, but this coming week is going to be even more so, with the Fed making its decision on interest rates on Wednesday. What's going to happen? Well, let's take a look. Before we take a look at what happened last week, just a quick reminder, we've set up a second channel entitled Finances Do Matter, with over 130 videos, and we produce around 5 a week, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not yet joined that channel. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold rose $6, rising from $1,956 to $1,962, having hit a high of 1987 and a low of 1946, a rise of 0.3%. In sterling terms, gold finished the week at £1,526, that's up £32. And in euros, it closed at €1,764, that's up €20. Have to admit, we've been waiting to buy gold between £1,400 and £1,450, which is where we believe it will be a bargain. And yet traders are preventing it from reaching that level and dip below £1,500 just to tease us. We may have missed the boat, but we'll find out later in the week. Silver fell 34 cents, falling from $24.97 to $24.63, having hit a high of $25.29 and a low of $24.61. A fall of 1.3% compared with the previous week's rise of 8%. In sterling terms, silver closed at £19.17, up 9 pence. Seems to like that £19 level. And in euros, it closed at 22.15 euros, that's down 0.11 euros. The gold to silver ratio rose from 78.4 to 1 to 79.7 to 1. The difference between gold's high and low was $41, and the difference between silver's high and low was just 68 cents. Compare that with the previous week's $2.38. Now, this is what we said last week concerning our forecast. We expect gold to trade between $1,900 and $2,000, which it did, quite comfortably. We also forecast silver to trade between $24 and $25.50, which it also did quite comfortably. Now, before we discuss what happened last week, and especially on Tuesday, Wednesday, and Thursday, let's look at the other financials. Bitcoin currently stands at $29,974. That's down $371 on the week. Equities were up, save the Nasdaq. The Dow Jones was up 718 points at 35,227. The S&P 500 up 31 points at 4,536. But the Nasdaq was down 81 points at 14,032. But we have to bear in mind it was up more than 450 points the previous week. Even the FTSE index managed to rise, and quite well, up 229 points at 7,663. Now, we produced a video yesterday on the Finances Do Matter channel as to why we believe the FTSE 100 index is offering good value at the moment, and we've placed a link to this video below in case you wish to see it. Oils were higher. Brent crude up $1.20 at 81.07. They're achieving what they're aiming to achieve, and that's oil above $80. And WTI crude closed at $77.07. That's up $1.65. The dollar index came roaring back above 100 at 101.07, and that's up 1.16 points on the week. Now, in terms of economic data last week, the Empire State Manufacturing Survey was better than anticipated for June, coming in at 1.1 compared with expectations of zero growth. The big news, though, were the retail sales for June announced on Tuesday, which came in at 0.2% compared with expectations of 0.5%. And a similar 0.2% if you excluded automobiles. This immediately suggested that interest rates were working, having the desired effect on retail spending, and we saw the dollar fall and precious metal prices rise for the next 2 days. However, when we saw on Thursday that jobless claims also fell and came in at 228,000, compared with expectations of 240,000, things started to reverse and a degree of realism crept back in, causing some correction in commodity prices and the dollar strengthening again. All of this suggesting, therefore, that the Fed may still indeed raise rates when the FOMC meets this coming Wednesday, albeit we suggest by only 25 basis points. Many analysts are hoping that this will be the last interest rate rise this year, but are certainly convinced that we're unlikely to see any interest rate cuts until at least December or well into 2024. Our view is that much depends on whether there is a recession and how high other countries raise their rates in the meantime. There is the potential of another 25 basis points left in the system beyond next Wednesday in our view, and it is all subject to data. Now this coming week we also have flash services and manufacturing PMIs on Monday, consumer confidence on Tuesday, jobless claims on Thursday, and another inflation report on Friday. Now this time it's the PCE index. Now just a reminder for those who perhaps haven't seen our various videos on PCE and CPI, the CPI index uses a narrower definition of consumer expenditures and only considers urban expenditures made directly by consumers. In contrast, PCE considers expenditures made by both urban and rural consumers, as well as expenditures made on their behalf by third parties. Now, the PCE index for May showed 0.1% growth, while the core PCE index came in at 0.3%. It's this core PCE that officials target more closely, and that is now expected to fall to 0.2% in June. So watch this carefully as an indication as to how markets will react. If 0.2% is the result, then this leads to a year-over-year core PCE of 4.2%. down from 4.6% the previous month. Now, if the previously announced CPI figures trend, we may see a slightly lower figure than this. If not, then all bets will be on another potential interest rate rise, probably in September or most certainly before the year ends. That's, of course, subject to other PCE and CPI announcements in the interim. Now, we also have personal income figures for June, as well being announced on Friday. So, all eyes will be on Wednesday's interest rate decision, and a side glance, or maybe more of a side glance, given to Friday's PCE announcement. Although gold prices rose last week, we suggest it was attempting to catch up a little with silver, which rose a huge 8% the previous week. Rising treasury yields have put some renewed pressure on gold prices, but the continuing risk of recession is keeping its price firmly within this $1,900 to $2,000 level. Only when it breaks 2,000 can we expect to see a push higher and potentially, ultimately, into all-time highs, which is what we predicted in our 2023 forecast, but towards the end of the year. And we're not really expecting this to occur until it becomes certain that interest rates have peaked and a rate reduction becomes likely. It doesn't have to quite happen, but the expectation of it about to happen could be enough to get those gold prices soaring. We also have to bear in mind that gold is still being demanded in reasonable quantity by central banks, and so they are clearly hedging their bets, so to speak, and perhaps getting in early before the wider investment community wakes up to this relatively cheap asset class. Silver, as already mentioned, had a massive run the previous week and took a breather last week. It is to some degree controlled by the value of the dollar and the propensity for a recession. As the dollar weakens and the prospect of a recession declines, the stronger the silver price becomes, and vice versa. For the moment, there is buying support at around the 24.50 level and resistance around 25.25, with psychological support at 24 and greater resistance at 26. Much this week will of course depend on what happens with the Fed on Wednesday. Not so much the decision, unless of course it's a surprise one, but we are confident it will rise interest rates by 25 basis points. But what is said thereafter? We're expecting a greater spread, therefore, for both gold and silver than we saw this past week. Now, with that in mind, we're envisaging gold to trade between 1925 and 2000, with 1875 to 2030 as outliers. If the Fed is in any way dovish, expect to see gold breach this 2000 level. If not, then we believe the 1900 to 2000 level dominates. Unless, of course, it surprises us all and says there's definitely going to be more rate rises and soon. Don't think that's going to quite happen, though. We forecast silver to trade between $24 and $25.75, with $23.25 to $26.25 as outliers. We're expecting more volatility in silver this week in either direction, depending on what the Fed does and does not say. What do you think? Do share your thoughts. Please, if you like this video, give us a thumbs up, subscribe, press the bell sign. If you don't like it, well, forget the thumbs up, but do subscribe and press the bell sign. Thank you for watching. Remember, we've put links below to our Finances Do Matter channel. We'll see you soon. Have a great weekend and a prosperous, and hopefully for us all now, a very prosperous week ahead.